Hi everyone, welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. My name is Atira and I'll be the moderator for today's session. Our topic this morning is sector and industry analysis identifying the leaders. Ever wonder how some investors spot companies that grow fast and deliver big returns? The key is following sectors and industry trends. Knowing which sectors are rising and which companies are leading can turn a good investment into a great one. So today, we are honored to have Miss Pauline Yong to share with you on how to analyze and identify emerging sectors and industry leaders so you can stay ahead of the market trends. Before we proceed, allow me to make a short disclaimer. Please be reminded that everything is shared in this session is mainly for educational purpose only, and by no way we are providing you advice to buy or sell any securities. You are 100% liable if you make any investment decision. Now, let me introduce our guest speaker for today, Miss Pauline Yong. Miss Pauline Yong is the CEO of Sigma Wealth Sdn Bhd. She is a certified financial planner, CFP, and a licensed financial planner with Securities Commission license, CMSRL, and a Bank Negara licensed financial advisor representative, FAR. Currently, she holds chairperson position in the Financial Planning Association Malaysia, FPAM, Johor chapter, and she is also their course facilitator for the FPAM CE courses. Miss Pauline is the author of 5 investment and financial planning books, including the MPH and popular bestseller I Love Stock and I Love Trading. She is the first female certified chartist CFTE in Malaysia and member of the Society of Technical Analysis STA UK. She received her MBA in Finance from University of Leicester, UK, and her BBA honor in Finance from York University, Canada. With that being said, let us warmly welcome Miss Pauline Yong to the floor. Good day, Miss Pauline. How are you
Hello.
today?
Yeah, hello, Atira. Hi, everyone.
Hi.
Good morning.
I hope
Uh,
you're doing well today.
yeah, it's good. Welcome to today's webinar. And okay,
So
hello. Hmm.
I will pass this to you,
Let me
okay,
share
Miss?
my slides. Okay.
Okay.
Okay. So today what we are going to do, in fact, is quite packed because the content is a lot. So we are going to talk about sector and industry analysis and how we are going to identify the leaders. So I have prepared quite a good content whereby we have both um, the soft factors as well as the numbers. Okay, so we are looking at both things, both data. We have the numbers as well as the um, soft factors. So I will also introduce some tools for you guys to research so that you can try to find the sector leaders as well. Okay, so all right, so let me continue. So this is what we're going to cover. Okay, as you can see that it is quite a lot. Oh, thank you, Faiza. Very interesting, my book. Yeah. Um, and as you can see, right, we have definitions and overview of the sectors and to understand the economic phases because we are looking at the sectors, right? So certain economic phase, which sectors to focus on, and we look at both the qualitative and quantitative analysis to spot the top performing sectors. And of course, the last part will be the ETS, whereby we will have a simulator, equity simulator, where you will see how to go about buying and selling your stocks. Okay. Now, maybe you may tell me how many of you do not have any investment experience yet? That means you haven't bought any shares yet. So can I have a show of hand? How many do not, okay, do not have any share like a experience in buying shares or stocks? Okay, maybe can have a show of hand. Anybody do not have any experience? So most of you have experience in buying the shares, right? You have some form of you have already buying the stocks, right? Okay, so how many of you are making money this year? Anybody? How many of you are making money this year? Can see your hand, or you can type a yes in the chat. If your portfolio is mostly green, that means you have more green than red lah. So that means you're okay. Okay, so how many of you are more green than red? Okay. Yes, very good, Faiza. Rusli, okay, good. Who else? How about others? Okay, very good. Not from, but from crypto or from US stocks. Oh, okay, the Eve is good, green, right? All green. If you say that your stocks is all green, that means you are doing very well. Just buy and hold. Okay, so Kyung Yo is more like a value investors, so buy and hold. So in fact, that is my objective for investing as well. My objective is normally I want to buy and hold. Okay, over the years, I have been trading, investing, and in the end, I find that investing is still the most comfortable way of investing. Okay, it's more comfortable as in you have less stress. If let's say you are trading, then you are more stressful. Okay, so it's up to you because it's your personality and your risk preference, and you decide what kind of strategies you want to use. Okay, yeah, okay, that's interesting. Okay, so actually for Bursa, right, last year was a very green year, right? You agree? Okay, so you just have to find the right sectors. Say for example, in 2020, 2021, if you invested in the technology sectors and the industrial, you make money. So your stocks portfolio will be in green. And in 2022, if you invested in plantation or energy, then your portfolio will be in green. And then in 2023, 2024, if you invested in utilities, constructions, and properties, then your portfolio will be in green as well. So this year, which sector your portfolio will be in green? Which sector this year? Anybody? Can anybody tell me in Busan, Malaysia, which sector is in green? Yes, very good. The E, REITs. Okay, only the REITs are in green. Semiconductor, are you sure the semiconductor? I think the semiconductors are in red. Okay, the finance is also in red. Construction is in green. Yeah, that's right. Okay, Rusli, you're right. So construction is in green. Yep. So we have constructions and the REITs are in green. So the rest are mostly in red. Okay. So what does that mean? So when you are looking at sectors, right, and then you are looking at cycles, right? So when it is in red, good news or bad news? It's bad news now, but then it will be good news next year, okay? Because it will be a cycle. So now you see it's in red. So maybe next year will be in green again. Okay, so we are looking at how we are going to spot the right sector so that we can ride the right trend, and then so that our portfolio are mostly in red. I mean, mostly in green than in red, okay? Yes. Okay, so that's right, Steve. Okay, so here we are looking at the industry and the sector. So let me introduce to you what does sectors. Sectors is more like a macro classification. So you have consumer sectors, and under the consumer sectors, then you have the tourism, you have the automobile, you have leisure, you have different subcategories. Okay, so those are the industry. So can we say that the sector is a big umbrella, and then the industry is a smaller subsectors? Okay, can we say that? Yes. Okay, so the sector will be a big umbrella. So you can have the consumers, you can have the energy, you can have the utility, the finance, construction. So these are big umbrella. Technology, big umbrella. So under the big umbrella, you have the smaller individual industry. So for example, the technology, the individual will be the semicon, okay, and the equipment and the software base and the platform base. Okay, so you have different types of a technology industry. Okay, okay. So why we need to distinguish the sectors, and that is because we want to buy the right sectors, the right stocks, and then we want to ride the curve, okay, the rising curve. So in every year, you must understand that there will be certain industries that are making money. Okay, it cannot be all the sectors unless it's a pandemic form of a recession. Okay, so if let's say it's a pandemic or stock market crash, then every sectors are in uh, selling pressure. But if let's say you are looking at a normal situation, normal economic cycles, then you will be looking at certain industries are doing well, certain industries are not doing well. Okay, and sometimes you can also look at it as a country base as well, geographical location. So if you're looking at the geographical location, right, you will look at the whole world as a global perspective. So if you're looking at the whole world as a global perspective, then you'll be able to identify which country are the more dominant in terms of the financial market. Okay, so can anybody tell me which country in the world is more dominant in terms of the stock market? Which countries in the world? Which are the countries in the world? Good morning. Yeah, USA. Yes, that's right. So we know that the US is the largest economy in the world. And if you want to know about this stock market or the stock investing, right? After all, you are buying into a company. You get what I mean? So meaning when you are buying into a stock or a share, you are buying into a company. So that means that if that company is making money, then you as a shareholder, you're happy or not? You're sure happy, right? So which means that you are trying to buy into a company whereby it is going to make a lot of money. And you as the shareholder, you will benefit from it as a form of a dividend, as a form of a capital appreciation. So if you look at the US as a country, right? Do you notice that the top companies in the world are mostly from the US? Say, for example, you look around in your belongings. How many items you have is actually produced by the American companies? You look at your mobile phone, okay? Yes, iPhone. You look at your laptop. You look at your the food that you eat, okay? Would you want to go for a Starbucks coffee bean, or you like to eat McDonald's, KFC's, and what kind of movies you like? You like to watch the Hollywood movies, okay? So and then the social media, what kind of social media you are using every day? Is it the Facebook, the YouTube, the and all the WhatsApp and all these social medias? Yeah, that's right. Okay, you have the Netflix, you have the Meta, you have the Microsoft. Yeah, especially the Microsoft. Isn't it every day when you open up your laptop, you are using the Microsoft? Okay, so when you are seeing everywhere, okay, that means that this company is doing well and it must be earning a lot of money. So these American companies are earning money from the whole world. Okay, so they have, so if so it makes sense for you to invest in these companies, because if you invest in these companies, you are the shareholders of these companies. That means this, you are accessing to the whole world. So for example, Oriental Copy, right? So yes, if you see that in Malaysia, you are everywhere you go, you see Oriental Copy. Everywhere you go, you see Oriental Copy. Everywhere you go, you see Maybank. Everywhere you go, you see CIMB Bank. And everywhere you talk to Maxis subscribers, and then Axiata, DG. So everywhere you go, you see that kind of a brand name. So that company is doing very well because they have the market share. Okay, so you are looking at companies not only in terms of within your country, but also within the whole world as a global perspective. Okay, so so then each of the sectors and the industries, we need to identify them, where the money is, okay, how they make the money. So if you are able to identify which company or which industry, okay, you don't identify the company first, you look at the industry first, okay, which industry is making money, then only you identify the leaders of the industry. Okay, so which means that you are looking at the macro perspective, you try to identify which sectors are doing well, and then which is a growth sectors, the sectors growth meaning that that sector people are demanding buying their goods, okay, people are consuming their goods, the sales revenue is a lot. Okay, so for example, now everybody is looking at AI. Okay, everybody is using AI as an application, and you are using it as your daily whatever. Okay, and a lot of the companies, not only as a consumer, but the companies are using AI to help them in managing their accounts, to follow up their sales, to do a lot of stuff using the AI application. So we are looking at AI application is everywhere, whether you are a business producer or you are a consumer. Okay, so this kind of a wide usage of a certain thing, that industry will sure do well. Okay, so that means the revenue sales from that industry will be huge. So you just need to identify this type of business or activities. Okay, so if let's say you are in the, let's say everywhere is having a war. Okay, so if everywhere is having a war, right, then you think about the mentality. So if the overseas is having a war, and then the people are looking at Donald Trump is also like a authoritative kind of a leader, and the policies that he's going after is very harsh policies. So then you see that the whole world is looking at a bit of uncertainties. Okay, so if you are looking at this kind of a financial environment, right? So what kind of sectors you think can do well? If 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 everybody have to look up to Donald Trump and then to see what is his policy, so there's not much of that means the whole world is not predictable. Okay, because you have to look at what one person is doing, then only you can make a decision for your own company. You can't do much because you can't plan too far ahead because there are still uncertainties out there. So if given this kind of an environment, right, what kind of a sectors you think can still do well? Anybody? Which sectors you think that is still resilient? So meaning that, okay, the impact will be least. Every sectors will be impacted for sure. Okay, but you look at which sectors will be less impact. Okay, so Bruce Lee says that construction is doing well is because of our projects. Okay, so which means that regardless of what is happening in elsewhere, our projects are ongoing. Okay, we have the infrastructure projects announced by the government, and then these projects has to continue, and it has been ongoing, and then in the future there will be more infrastructure projects. So we are pretty much having a certainty, okay, a so-called a sure thing or a certainty in the projects and in the book orders. Okay, so if you have certain sure thing or certainty about your book orders, then you know that this industry, given that these book orders are coming in, you know that they are making some money. Okay, so which means that this certain part of the sectors, they are more working towards the fulfilling the orders. So you have the government project, you have the certain projects, you just need to produce it and then you fulfill the order. Okay, so pretty much you are within the own country. And even for Gamuda, they also have some government project in Australia and in Taiwan and in Singapore. So those are the government projects. So these government projects are already awarded. So it's already sure. Okay, so then you know that it is going to make money. Okay, how about other sectors? Which other sectors is also quite resilient? Okay, so we call this resilient sectors. So REITs, okay, because for the REITs, right, you already have a lease with your tenants, right? So the lease is like 10 years, 20 years of agreement. So then you just continue to collect the rental. Okay, so it is more stable in a sense, right? And okay, in terms of the technology and the crypto, right? So if you are looking at the technology and the crypto, so the crypto is more on the another overseas already. So you're looking at another kind of a investment. Okay, so that will be another market. So now it's because of the Donald Trump. So again, we still have to go back to Donald Trump because he's the one that is promoting the cryptocurrencies. Okay, so he's the one. In fact, last month they have approved a Genius Act. Because of this approval, it means that he's trying to legalize some of the stable currency. Okay, so that is why the cryptocurrencies are doing very well because of Donald Trump, and also because of the technology is because of the AI, the utility, yes, okay, because of the everybody, you regardless whether the other countries are what they are doing, we as a Malaysia, as a household, every day we are using the electricity. Okay, every day you have to use the aircon. Every day you have to use the electricity in your daily life. So therefore, utilities is something that is more resilient. Okay, and also when we look at the data centers, so there will be more demand for the utilities as well. So that's why the utilities are also doing well. Okay. Okay, so that's good. So that means that you guys know how to identify. Okay. So now let's take a look at some of the metrics. Okay. There are certain, so just now we discussed is based on the observation, based on the macro. So those are the factors, the soft factors. Okay, so now we look at the numbers. So the numbers, what we need to look at is the net profit and the sales revenue. Okay, so these are the two main metric. So if you to know whether this industry or this sectors is growing, you look at the sector revenue, industry revenue. Okay, because as a whole, you can combine all the companies in this industry, and then you can project what is the industry revenue as well. Okay, so normally when people are looking at the sectors, right, they will look at, oh, this semiconductors industry, or you can looking at estimation of how many billions of dollars that you are looking at for 2025, and then for 2026 you are looking at this industry is going to give you how many billions of dollars. So they are able to quantify. Okay, you are able to quantify your revenue as a whole industry. Okay, so then if you are able to quantify the whole industry revenue, are you able to quantify your individual companies? You think you can? If let's say the whole industry revenue is able to quantify, a lot of research report out there, they're able to quantify. And then you as an individual company, right? Do you think you can also quantify your revenue growth as well? You think you can? Yes or no? Okay, so if you see the revenue, global revenue is already there, right? So if you are individual company, right, you think you can, okay, annual report, okay, okay. So okay, let me give you a perspective. Okay, so if within the industry, right, will you be able to spot who is the big player or the largest market share? Will you be able to spot as a as a like a consumer? Will you be able to find or see who is the largest consume the market share? Who has the largest market share? Will you be able to see? Can you tell from the observation and also from the report? Okay, let's say within the industry, right? You know that Gamuda has the largest market share. Okay, and then you know that Suncon has the number 2 second largest market share. Okay, and then you know that this whole industry, the sector revenue is this much. So do you think you are able to forecast what Gamuda is producing? Okay, just like if you think that the AI chips, okay, the AI chips sales revenue for 2026 is okay, you have a figure there. And you know that NVIDIA is accounting for 80%, okay, 80% of the AI chips market share. So do you think you are able to quantify what NVIDIA can produce for next year? Yes or no? Okay, so meaning you have this, let me try to draw. Yes, okay. So here you have the sector revenue. Let's say I just give a sector revenue lah, okay, of 100 billion. Okay, and then yeah, and then you know that NVIDIA is having a 80% of a market share, right? So can you quantify how much is the NVIDIA's revenue? Yes, 80% of the 100B will be 80B. You get what I mean? So that's how you are able to quantify. So that's why the sector revenue is so important. It gives you a perspective of how these overall sectors are performing. And then when you are looking at the next year's growth, whether next year this industry or this sectors is able to produce even more. Okay, you are looking at whether this is growing industry or not. So this will determine whether it's a growing industry or not. So next hype is quantum computing. Yes, I agree. Okay, so talk about quantum computing. I have a lot more to talk about, but I wouldn't talk about it in this session. Okay, so yes, okay, so all this, but the quantum computing will take some time. Okay, minimum 5 to 10 years because it is a very complicated technology. Okay. So you see revenue and the earnings. So when you are able to forecast a revenue, because this is a revenue, all right? Revenue. So when you're able to forecast the revenue, right? Are you able to forecast the NVIDIA net profit? Yes or no? Net earnings, net profit. If you can forecast the revenue, are you able to forecast the net profit? Yes or no? Anybody? You know the revenue is 80B, right? Then the net profit is forecast, yes. Okay, based on what? Okay. Yeah, definitely we have some laggard companies, okay? But I'm not interested in the laggard companies. I'm more interested in the leaders of the industry, okay? So over the years, I've been investing for so many years, and I've seen a lot of my clients' portfolio, and I realized something. Always invest in the leaders, okay? You can invest in the laggards, but you have to buy the leaders first, then only you buy the laggards. You get what I mean? So meaning you don't straight away jump and buy the laggards and then without buying the leaders. Because most of the time you probably may get disappointed because the laggards may always remain the laggards. So you have to buy the leaders first, then only you buy the laggards. Okay. Excuse me. FCF, free cash flow, okay. Actually more simple than the free cash flow. Okay, true also, yesterday's leader can turn also into a laggard. So that's why we have to monitor. We have to keep on monitoring who are the competitors, whether there are strong competitors coming to fight the NVIDIA's technology or not. Okay, so we have to do that. Okay, so there is actually a more straightforward way to get the net profit. It's actually from the, see who can give me, net profit, what? Net profit what? Net profit previous well, the previous what? Okay, so it's a net profit margin, isn't it? So this net profit margin easy to find or not? Yeah, you can find from the i3 investors. So basically the net profit margin is pretty much you can find from the internet. So let's say the net profit margin for Nvidia is 40%, 30 or 40%. I think it's pretty high. Okay, let's say it's 40%. So then you know that the net profit for the Nvidia is about 40B. Okay, so it's very straightforward. So from the sector revenue, you can forecast the individual company revenue based on their market share. And then from there, you can down to the net profit based on the net profit margin. And then from the net profit margin, you can get the net profit figure. So from a net profit figure, can you get the earning per share? Can or not? Can get the earning per share or not? Yes or no? Yes, right? You can get the earnings per share by divided by the 40B divided by the number of shares. Okay, so this number of share also can be found from the internet as well. So then you can get the earnings per share. So once you get the earnings per share, are you able to see how the price move or not? Yes or no? Why every quarterly results, everybody is so concerned about the earning per share? Do you notice that every quarterly results, right? All eyes are on the earning per share, see whether the earning per share beat the market or not. So that means this earning per share is super important, isn't it? And this earning per share will affect the share price, okay? Because your PE ratio is equal to your price over your earning per share. So if your earning per share is changing, increase or reduce, it will directly impact on the share price. So that's how it works. Okay, so when you are looking at the stock market, the share price, the one thing that will determine the price appreciation is very much determined by the industry growth, revenue growth. Okay, whether the industry is a growing industry or not. So that's number one. And then number two will be the individual company, whereby that particular individual company, whether they have a huge market share or not. So if they have a huge market share, then they can enjoy the growth of the industry because they have the market share, they have the business, they have the customers, so they can enjoy the growth of the industry. Okay, so if let's say another company, maybe ABC company, okay, that is also producing the chips, but then they are not so famous, so they may not have that kind of customers. So whenever there is a customer looking for this kind of GPU chips, they will think about the Blackwell chips. Okay, and then this ABC company, maybe they don't think so much, okay, because the branding wise is still the Nvidia chips, the Blackwell chips. You get what I mean? So that's how you look at the revenue and the earnings, and then the market share, and then why it matters. Okay. Okay. So how do you determine whether the earning per share is good? Some companies' earning per share is small, but they are huge. They are huge. You mean when the earning per share is like almost like negative, it's not making money, is it? Small means that you're not making money. So when your earning per share is not making money, that means you do not have much net profit. So if the share price continue to go higher, then obviously you know that is not sustainable. Okay, it does happen. So because there are many factors that affecting the share price. Earning per share is one of it, and the other part of it is your demand and supply of the shares. So it's the capital. So whether you have huge funds to support this particular stock or not. So if let's say you have some huge funds to support this this stock, regardless of the earnings, so of course this share price will go higher. It's a demand and supply. Some is like 20 cents, while others are two ringgit. Okay, so yeah, so then when you're looking at the PE, so whether you are 20 cents or 2 ringgit, you just have to calculate accordingly. So let's say the PE ratio is 20, right? And then you just have to use the earning per share 20 times your PE ratio. Let's say you have 20 cents, then your price is about 4 4 ringgit, right? Okay, 4 ringgit. So if let's say you are 2 ringgit stock, then your share price will be, wow, will be 4, uh, 400 or 40, oh sorry, 40, okay. Is it 40, correct? Okay, wait now, use your calculator. 40, right? 2, you see, 0.2 times 20, yeah, 0.2 times 20, okay. So if it's, yeah, correct, okay, 40, yes, correct. Okay, so then your share price will be 40. So so it's just mathematics, okay? Okay. So let's clear all this. So profitability, okay? So important is the profitable, whether this company is very profitable or not. So among all these sectors, right, there are certain sectors that are more profitable than other sectors. So can you identify which sectors or industries are more profitable? So we are looking at profitable means we are looking at the net profit margin, okay? So can anybody tell me which sectors you can think of is more profitable? Okay, technology. Okay, just now, like Nvidia, because of their brands already, their technology know-how, because they already have the copyrights, right? So the patent. So that's why they can have such a big profit margin. But if we are looking at the chip manufacturers, right? Can the chip manufacturer give you such a big profit margin? No, cannot, because you are the low end chip manufacturer. You see, you have high end and low end. The high end one, of course, you can have a higher profit margin, but the low end you can't. Okay, so technology also, you see which end you are. Okay, banks. Okay, good. The banks, 20% is like a norm. Okay, what else? Okay, the bank's 20% is a norm, and in some like consumer, okay, consumer 20% is also possible. All right, and what else? Okay, if let's say you are looking at let's say construction. Okay, what kind of a profit margin you are expecting from the construction? Okay, if let's say, you know, okay, yeah, 5 to 10%. Okay, 5 to 10%, because each of the, you have to see that this construction, let's say you are looking at the tendering of a project, right? So normally when you are tendering for a government project or any projects, so what are the profit margin that they will add on to their quotation? Okay, so I think it's about 7%. Okay, so some project they can even give as low as 5%. Okay, because you are looking at a big quantity, like a big amount of award, like a 1 million, 2 million. Okay, so then your 5% is considered enough enough for the company. Okay, so that is looking at the industry, the way they do business. Okay, so when you are looking at the profitability, you have to understand the way they do business, how they do business. All right. Okay, and another thing is the REITs, right? Can anybody tell me what would be the profit margin for the REITs? Anybody? What's the profit margin for the REITs? Make a wild guess. 7%? No, REITs, I mean the net profit margin for the REITs, the net profit margin. The net profit margin for the REITs, not like your dividend. I'm not talking about your dividend from your REITs. I'm talking about how this REITs company, they make the money. They collect rental, right? So it's like, oh, you build a office tower, and then you start to rent out to individual tenants, and then you collect the rental, right? So then after you collected the rental, then you have to pay your expenses. So after you pay the expenses, then the leftover will be your net profit. Okay, so that will be your net profit. So what is the net profit margin for the REITs? 10 to no, it's not 10 to 15. More. More. No, it's not 20. More. 30 to 60. Yeah, correct. 30 to 60. Yes. Okay, 30 to 60. Some I saw 70 also got. Okay, you go and check the Bursa REITs. Okay, individual Bursa REITs, you go and check one by one. As high as 70 also have. Okay, 60 also have. 50 also have. Okay, so that is our REITs net profit margin. Okay. So then in terms of the valuation, just now was profitability, right? So in terms of the valuation, you can value based on the price to earnings, price to the book, EV, enterprise value to the EBITDA. If you look at the EV, enterprise value, it is like the market cap. Okay, so it's something like the price. And then the EBITDA is like the net profit. So, sorry, so the price, and then it's like the earnings. Okay, so this PE and the enterprise value to the EBITDA are very similar, same concept. Okay, it's just that they're using different numbers to produce the answer. The answer should be similar. And then it helps to identify the price, whether it's overvalue or undervalue. Okay, so that is the purpose of valuation. So if you want to know whether this stock is overvalued or undervalued, you look at the valuation metric. Okay, and what is the valuation metric? Will be the price to earnings, price to the book, and enterprise value. Okay, so these are the valuation metrics. Okay, to see whether you are overvalued or undervalued. This just now the net profit. Okay, the net profit, like this one, okay, the profitability, it won't tell you whether the price is overvalued or undervalued. It can only tell you whether the company is profitable or not. Okay, whether you are profitable, then it's profitable net profit margin. But just now, this the valuation, okay, so this valuation is looking at the price compared to the earnings. The current price compared to the book value, the current market price compared to the net profit. Okay, so you're looking at the price compared to a certain thing. So then you are looking at this price, whether it's overvalued or undervalued. Okay, so the P ratio, the higher the better or the lower the better, normally. So how do you know whether it's overvalued or undervalued? PE growth more important than PE. Yes, in fact, for all the industry, PE growth is important. Okay, for all the industry, PE growth is important because this PE growth will definitely tell you whether this industry is growing or not. So that's why for each of the industry, PE growth is important. It's just that the growth rate will just tell you whether it is growing or not. But when it comes to the PE, you are looking at another thing, which is the valuation. Okay, so you're looking at two different things. One is that you're looking at the growth of the industry. The PE is looking at the valuation of the stock. Okay, so both are equally important. Okay, but how do you know whether, if let's say I see that the PE ratio is 12, okay, so what can I tell about this? Is it overvalued or undervalued? If the PE is 12, is it overvalued or undervalued? Anybody? Depending on the sector. Okay, good. Okay. Let's say this sector average is 18 lah. Okay, let's say this sector average is 18. And currently you see that it is 12. So overvalue or undervalue? So this is, let's say, industry average. Okay, so it's undervalued based on the earnings per share. Okay, so it's undervalued. So then this is the price to the book value. Okay. Price to the book value, if let's say it is equal to 0.5. Okay, so meaning that the price is 1 ringgit, but the book value is 2 ringgit. Okay, that kind of a thing. So meaning that you are using 1 ringgit to buy a 2 ringgit book value stocks. Book value means your net tangible asset. Okay, so your net tangible asset is 2 ringgit, and then your current share price is 1 ringgit. So your price to book value is 0.5. So is this undervalue or overvalue? Undervalue as well. Okay, so meaning that if you are paying the price is more or less the same as the book value, that means it is still reasonable. So if this is equal to 1, that means it is reasonable, fair value. About 1 to 2 times, okay, the book value is reasonable. Okay, like if let's say you tell me the book price of book value is 7 times, then what is your impression? Okay, you will think that, wow, 7 times I'm paying 7 ringgit for a 1 ringgit stock. You get what I mean? Okay, 7 times means that your price is 7 ringgit, but your book value is only 1 ringgit. So meaning that you are paying 7 ringgit for a 1 ringgit stock. So how do you feel? You feel expensive, right? Okay, so then this whether it's like whether you are paying for the stock, whether you pay too expensive or not. Okay, so if you pay overvalued, that means you are paying on the expensive price. Okay, if it's undervalued, that means you are paying at a discounting price. Okay. For AI, stock P is above 30. Isn't that overvalued and expensive? Okay. So for AI, you have to look at the industry. So the reason why the AI, like NVIDIA and all these tech stocks are able to command PE 30 times and above, and that is because people are willing to pay. All this is because people are willing to pay. So if you think that this industry will do well, and then in the future it will continue to do better than what you are seeing now, and you think that it will do a lot better than what you are seeing now, then of course you are willing to pay higher price now because you want to pay now higher price. You don't mind because you know that in the future the earnings will catch up, because you are looking at your price over earnings, right? Earning per share. Because your current earning per share is low, but you are looking at the future earnings per share is going to increase. So you think that now, although it's 30 times, but because the future earnings is going to increase, so it will catch up with my valuation. Okay. If it's 100, then of course it's not reasonable already. Okay, if at the PE of a rate of 100 times and you think it's reasonable, then you go ahead, because it also depends on your risk preference. Remember, you are the one who buy the stock. I buy for my own stock portfolio. You buy for your own stock portfolio. So you are responsible for your own risk preference, because you understand your risk preference well. So then you know that the PE ratio is 100 times, and then you want to buy. And that is because you have a greater risk appetite. There's no right or wrong. Okay, there's no right or wrong. So you can go ahead because you have a greater risk appetite than me. So then you can go ahead and buy. Okay, so just be aware that you must understand your risk preference. Okay. Okay. So then let's take a look at some tools. Okay, so these are some tools, and for today, I want to look at the screening tools. Okay. I will go to the website. Okay, so basically, you need to identify the sectors based on your reading and your research, and then see which sectors based on your environmental, financial environment analysis, and then you see which sectors can do well. Then you narrow down on the industry and the sectors, and then you use the metric like the P, the ROE, and all this. Okay, so let's go to the screen now. So yeah, definitely Bloomberg, all these terminal are for the and all those facts that all those are for the paid premium like research house. Okay, so if yours is working in the research um, department, so you will get it. Okay, but in individual, all this 100K, I think it's 100K per year. So all these are expensive. Maybe it's yeah. So it's so expensive, so we cannot afford it. Okay, so okay. Here we are looking at My Busa. Okay, so I share with you this website. You can click this link, and then you can look at the heat map. So it's actually from the market here, the tools. Okay, so there are lots of tools here. So we will look at 3 of these tools. Heat map is the current website, and then we will look at the screener. We will look at the equities simulators. Okay, so we will look at these 3. Okay, so we will look at the heat map first. Okay, so the heat map, you see that there are some numbers here, right? So the gray color is 0. Okay, so if you see gray color, that means that their change is less than 1%, so it's 0 gray color. So if you see more than 1% drop, is a negative pink color. Okay, 3% drop is a red color. Okay, and then 2% will be this color. And then the green will be 1% green, light green, and then the dark green will be 3% positive. So then from one glance here, you can see which sectors are doing well today. Okay, so today, can anybody tell me which sectors are doing well? It looks like the industries are doing well. And then what is this? The healthcare is doing well. Okay, so KPJ is doing well. Okay, go back. Okay, loading. Okay, so you can see that the green colors are the sectors that are doing well. Okay, if you to click, then you can go into the individual company. Like just now I click and then I go into the KPJ. Okay, so if you to click, then you go into that company. But the title here are technology, industrial, utilities, basic material, consumer, non-cyclical, financial. So these are the sectors, okay? Then we look into the screener. Okay. So if let's say you want to screen for in terms of the performance, okay, the stock performance, you can click here, then it will be according to the stock performance. So let's say I click performance. Then you can see that this will be looking at their price change, okay? So you can actually click change for 1 day. You click 1 time, then you click 1 more time, then it will be according to the biggest change for 1 day percentage. Okay, so these are the biggest change for today for percentage wise. Okay, so you can also look at the weekly change and the monthly change. Okay, so this is the performance looking at the price change. Then you can also look at the valuation, okay, based on the PE ratio. So if let's say you want to screen according to the PE, see which one has the lowest PE or which one has the highest PE, you can screen according to this as well. Okay, so these are the valuation, and then you can also look at the dividends. You can screen for the dividend stock. Okay, dividend yield. So this will be the highest dividend yield. And then if you were to click again, then you will be ranked according to the lowest and the margin and things like that. Okay. So I will also introduce another screener. It's called the KLSE screener. Okay, so this KLSE screener is free. It's a free platform whereby you can basically look at it as a very straightforward kind of a screener. Why straightforward? Because you don't have all this a lot of numbers. So this you have a lot of buttons and things like that, right? So this screener is a very straightforward screener. It's like appear like an Excel worksheet format, whereby the old school type. Okay, so if you prefer the old school type, then this screener will be suitable for you. Okay, so how I screen the sectors will be, if let's say you identify that the REITs is something that you want to buy. Okay, so then you go to the main market, and then you click the REITs. Okay, real estate investment trust, and you scroll down, screen. Okay, then you will see this. So then you have all the REITs here, and then you can try to look at their different metrics. So you have the net tangible, you have the dividend per share, earning per share, net tangible asset, P/E ratio, dividend yield, ROE, and price to book value. And then you also have the market cap. So these are the basic metric if you want to compare across the different stocks. Okay, so these are the basic metric, and it has all these basic metrics in one big table like this. So you can basically screen according to the market cap. So if let's say you want to screen according to the market cap, so there are these arrows, right? So you can click one time, and then you can click one more time. Okay, click one more time. So will be the largest market cap will be screening here. Okay, so then you see that these are the real estate with the largest market cap is KLCC REIT, IGB REIT, followed by Sun REIT, Pavilion REIT, X REIT. So this according to their market cap. And then you can look at their dividend yield. What is their dividend yield? Their price to the book value. Okay, so this is their net tangible asset, right? So price to the book value. So just now I said the price to the book value has to be how much? Within 1 to 2, right? 1 to 2. So all these are all within 1 to 2. So that means that these the price to book value are quite reasonable, right? Many are like 0. less than 1. Okay, so in terms of the price to book value, the valuation is quite good. And then in terms of the PE, many of these are less than 20 times PE, except this one. Okay, the others are less than 20 times. Okay, so which means that in terms of the PE, also quite attractive as well. Okay, so which means that this REITs industry, these REITs, they are actually trading at a reasonable level. Okay, quite a reasonable level. So then you can also try to look at other industries. So let's say you want to look at the technology industry. You can click here and then go for technology. And you can click the screen. And then you can see these are the tech stocks. Okay. And again, these are the market cap. So this 163 million is too little. So I want to go for the largest market cap. So the largest market cap will be Inari, followed by Vitrox, Frontcan, Zetrix, MPI, Greatech, all this. So then you can see these are the top. Usually the largest market cap will be like the top player in the industry. Okay, so the top players these are the top players. So if you are interested in buying the top players, then you are focusing on the top 5. You should be focusing on the top 5 of this chart, this table. Okay, so we can scroll down, and then you can see that the P ratio is 33, 77, 58, 36, 38. So you know that certain are a bit high and certain are, in fact, many are high, and then this is low. You can see how it goes, right? Mobile phone. Okay, you can click the link that I give you. Just now I give you the link, right? So you click the link. Are you able to access to it? Okay, you try again and see. Okay, because these are all web-based. So if it's a web-based, supposed to be you can click on your mobile phone. It will be better if it's if you are looking for the app, I don't think they have a mobile app. Okay, I don't think they have a mobile app. But if you are looking using your Google Chrome Google Chrome browser to click the link, you'll be able to see this web-based. So this is a web-based application. Okay, it's not a app application. Okay, it's not a mobile app, it's a web-based. So you can use a Google Chrome or anything to open up. Okay, so then the price to book value is oh, got app, is it? Okay, thank you, Faisal. So, okay, so Faisal says that the KLSE screener has the app. So then you can go to the App Store to Google search the app. Okay, so yes. So only for, yeah, correct. Only for Malaysia stock. Okay, for Malaysia one. Yeah, I think so. Malaysia one. Okay. So then you can see, all right. Okay, so let's go back to my slides. Busan Malaysia, cover Malaysia. That's correct. Okay. All right. So next, we look at how to identify which sector. So you look at this chart, right? The app is different from what you show, right? So then you stick to the web-based now, okay? Because I'm used to the web-based. I don't use the app. I'm used to the web-based. So you stick to the web-based. You can also use your iPad. If you have a tablet, you use your iPad to open up, will be easier as well. Okay, so here you see that these economic phases and the sector performance, because as I said, we do recognize that the economy will go through an economic cycle. So your role is just to identify the cycle and then to see that under which cycle you have to focus on which sectors. Okay, so that will be your objective. So before I flash you the next slide, so can anybody tell me, okay, so during the contraction, so during this recession, what is good? During the expansion, which sector is good? Okay, so if let's say your economy is in a recession, right? So if it's in a recession, what kind of stock you should hold? Like, okay, consumer, resilient, okay? Downturn utilities, yes, utilities. You have to look at the resilient sector, okay? So utilities, defensive, yeah, correct, defensive one, okay? And the consumer, you have to be careful what kind of consumer, the stable consumer goods, okay, stable. Okay. REITs, okay. But actually REITs also go through the cycle. Okay, I wouldn't say REITs, but then REITs, if let's say you are looking at, you're not selling it, maybe you'll continue to hold the REITs, okay? But the REITs will also go through the cycle. Okay, but okay, just okay, so it's very limited. But however, you may want to add in the dividend stock here. So if it's a dividend, then you just collect the dividend and then you don't bother to think about the capital appreciation. Then you can consider the REITs, the banks, and things like that. Okay. But normally, even if you are in a recession, right, the REITs, the banks, all will be affected. Okay. Okay. Banking good. No, banks will be affected. Okay. Banks will be affected. Okay. So but unless you, as I said, you said that, okay, I just want a dividend stocks. So you don't mind the price to go down. Okay. So then you can continue to hold. But if you were to ask me, these are the defensive. Utilities, stable consumers are the defensive. Okay. Then how about here? Okay, wait now. Where are we? Wait. Okay, so how about here? What kind of how about here? Expanding. Okay, when you are expanding, what is good? Which sectors are good? Basically all the sectors. All the sectors are good. So you will see that the constructions, yes, constructions. You see the consumer, okay, the banks, okay, you see, basically many of these sectors will be good. Okay, so which means that as long as you see the income level increase, and then people will buy more of these things, so then these sectors will go higher. okay, properties, yes, okay. So all this will be growing into this expansion and also maybe to the peak, okay. Now, once you are to the peak, right, then you have to start to worry about overprice, okay. So then you may want to sell, okay. So all you enjoy the growth, right? So you enjoy the growth, and then when you are at the peak, you may want to sell and then to convert some of these. You don't have to convert all, just switch some of this into what? Okay, back to the defensive again. Okay, so when you are looking at profit taking from away from all these bullish kind of sectors, you'll be looking back to the defensive sectors again. So the defensive will be the utilities, the staples, and the dividends stocks. Okay, so the dividend stocks also include the REITs and the banks as well. Okay, so you will have to, and some of the industrial also dividends stocks like Gas Malaysia and all these industrial, okay, Hong Leong industry, all this. Okay, because when it is defensive, right, all this definitely will go down. So meaning that you are looking at, you don't mind, okay, the price depreciation, and then you continue to hold, but at the same time, you are looking at your income as a dividend income. So you are trying to switch from the capital gain and then to the dividend income. Okay, okay. So you can see that here, the expansion, you have all this rising GDP and low and unemployment rate. And contraction, you have declining GDP and then rising unemployment. So you just have to, where are we now? Okay, so good question. So can anybody tell me where are we now? Okay, where are we now? Okay, remember the 2020 was the pandemic, right? So now we are in 2025. So where are we now? Anybody? Do you, okay, I can understand some of you. If you are in a certain sectors of the industry, you probably feel the economy is not doing well. Okay, but however, if you are working as a property broker or you are working in the construction sector, then you will think that the economy is here. So it depends on which industry you are working at now, right? I will have to say that we are in the expansion phase. Okay, why we are in the expansion phase is because our GDP is 4%. You look at the GDP, okay? You don't look at anything else. You just look at the GDP. So if the GDP is 4%, so where are we? So obviously we're in the expansion phase. Unless you tell me that the GDP is 0%, then maybe we're still down here. Okay, so we are really out of the cycle low already. So we should be looking at moving forward. But in the process of moving forward, we are experiencing some slow growth because of the Donald Trump, okay? So because of the tariffs, because of all these exports policies imposed by another country, because we are exporting nation, okay? We are a country whereby we are export country. So if let's say other countries, which is our biggest major export partner, they are imposing tariff on us, then it will affect our sales, our exports to them. Okay, so that will affect our GDP. Okay. Our GDP, 3 to 5%. Okay, so that will be a good GDP reading, 3 to 5%. Okay, so if we have still 4%, still good. 3%, slow. Okay, below 3, mild recession. Okay, if we are having below 3, is if 2, 0, all these are mild recession. Negative recession. Okay, negative is like a recession. The definition for a recession is 2 consecutive negative quarters of a GDP. Okay. So then we just need to rotate the sectors. Okay. So then how do we identify the sectors? I'll have to remove all this writing first. Okay. Okay, so the sector strategy is that we just have to switch. Okay, when we identify, we just have to switch. So now we're in the expansion phase. Okay. So just now I show you how we can identify this kind of a trend by looking at the environment, and then you have to read a lot of articles, try to keep track with what is happening around the world. And because always remember, the financial market and the economy is not inward looking. You cannot just look at Malaysia. You have to be a global outward looking. Okay, you look outside of Malaysia. You cannot work inside Malaysia. The reason is because Malaysia is a small country. If let's say you are looking at a big country, even if you say you are looking at a big country like China or Japan or US, right? You are also looking at the global as a whole world perspective, because the whole world is very interrelated now because of the globalization. The whole is interrelated. So we are looking at the global financial market is all intertwined all together. So it's the sentiments all affect one another. So we have to look beyond. Okay. So then all this. So then the key metric, I repeat, will be based on the PE ratio, price to book value, look at the profitability, you look at the sales revenue growth. Okay, so this is what we have done just now. And then for the tools, we will look at the Bursa Malaysia My Bursa platform, or we can go to the KLSE screener to look at the screening tools. Okay. And then for the technical analysis, for those of you who know a bit about technical analysis, perhaps you can even look at the RSI. You can take a look at the RSI and then to see whether you are at the oversold or overbought position, so that you know your sectors, whether it is bullish or bearish. Okay. And so, for example, all this metric, if let's say you have a low PE and then with a high ROE, it shows that it is undervalued. Yeah, I am looking at, we should be looking at, for me, I look at this year as a low cycle. And then we should be looking at 2026, 2027 should be better and better. Okay, we should be looking at that. Because the economic cycle is, if let's say you're looking at like 0, 1, and then this is 5, and then this is 9, and then you are going into 2030. Okay, so if you are looking at this kind of every 10 years, you are looking at the every 10 years, right? We are starting from a low cycle beginning, then top, and then we have a certain correction, and then we'll start from a cycle, and then so the cycle is like this. So then they bound to have some form of a recession. The recession normally statistically is like once in a 10 years time. So perhaps the next recession will be towards the end of the decade. Okay, then after that, then you start from 2031, 2032, start from low and then start to rise again. Okay, so these are the the cycle of the economy. Okay. Comment on the foreign fund flow from the Bursa. Okay. I would think that this there are many reasons for fund managers why they want to like a certain country or why they do not like to like a certain country. There are many reasons. Basically, we can look at from two perspectives. One is the fundamental, based on the fundamental of the country, whether you think that this country is doing well or not. So that is based on the fundamental. Another thing is politics, based on the politics. If let's say they think that this country, the politics is stable, politically stable, then they may like this country. Okay, so there are many factors, or maybe they could be due to other reasons, like other reasons that I didn't mention. Okay, so because of different various reasons, then a fund manager, you may choose which country to invest. For example, okay, so for example, if you look at Myanmar, you look at Cambodia, okay, you as an investor, you don't look at the fund manager, like you as an investor, would you want to go to Myanmar and Cambodia to invest? You think about it, okay, and then you look at Thailand, okay, would you want to invest in the Thailand stocks? Okay, so which means that why you don't want to go to these countries? Do you find that these countries political wise is not very stable, it's not very steady? Okay, like for example, you look at Thailand, isn't it, every few months they keep changing their prime ministers. So if a country every few months keep changing the prime minister, isn't it, it shows to the whole world that this country is not stable, politically not stable. So there are many reasons, okay, so we never know. But if you look at our Malaysia, right, they are not leaving Malaysia, they are just switching to the bond market. Maybe they feel that the equity market they are not interested, and then they want to switch to the bond market. Okay, so the money is still here, it's just that they are switching to another assets. Okay, okay, so if you look at the, let's say we look at this technology, so for example a case study, and you will see that in 2020 2021, right, when everybody was locked down, what happened is that everybody turned to the internet online, okay, and it is this internet online thing that caused a boom to all the technology stocks, okay, and then also because of the shortage in the supply, so all these technology stocks all went higher. So what happened is that because of the surge in the remote work, cloud computing, and then all the FANG stocks all come into the picture. So then you have the FANG stocks. And then the seven magnificent. Okay. After the seven magnificent, now is the five AI. AI in terms of their chips, their GPUs. Okay, the five AI. So we'll include the NVIDIA, TSMC, the Broadcom, and all this. Okay. So we need to identify, sometimes if let's say you know about the technical analysis, you can pull out the chart for each of the index, and then you can see the flow. Okay, you can see the on the monthly chart, you can see the down, the up trend. So these are the stock market cycle. So for what we need to do as individual investors, we just need to monitor our GDP level, because this GDP level tell us which phase we are at in the economic cycle, which phase we are at. Are we expansion? Are we recession? Okay, tell us where we are. Then, of course, the inflation and the unemployment is a supplementary. Then we identify which sectors to go in. So after you identify which sector to go in, you go for the industry leaders by looking at their fundamentals, their metrics. Okay, so you can also use the ETF or individual stocks to invest. And then as the economy cycle go, and you observe the GDP, you observe the world happening, then you see that, okay, we need to rebalance. Then you just rebalance. You switch out from one sector, you switch to another sector. And for example, last year, second half of the last year, I switched out from my properties, constructions, because I make money already. So I switch out, and then I buy into the banks. Okay, so you switch out. Okay, so what are the mistakes to avoid? So because sometimes we may be over reliance on the historical data. Okay, so we have to be forward looking. We cannot keep on looking at the numbers. Okay, very, very important. You cannot keep on looking at the past PE ratio, the past earnings per share ratio. You cannot just looking at this past data. You have to be forward looking, forecast into the future. And then sometimes you may ignore the macro trend. So just now, I try my best to give you a perspective that we should not be inward looking, but we should be global perspective, okay? Because we are a small country, we'll be impacted by all over the world, okay? So we have to be looking to the global perspective, look at the big macro trend, and then follow the US-China politics. Okay, not only you need to follow Malaysia politics, but the US and China politics. Okay, and that will impact the global financial market. And then sometimes you may run into this confirmation bias. The confirmation bias is when you have a certain belief that certain sectors will do well, and then you try to look at those articles that are confirming with your belief, and then you ignore certain articles that talk the negative things about your belief. Okay, so then this is a bias, confirmation bias. So it can be dangerous. So meaning that if you believe that this industry is doing well, and then so you just screen those articles that confirm your belief, and then you just read those articles. Oh, the chips industries are doing well, the semicon is doing well. Okay, you just focus on those, and then you ignore those articles say that, hey, the China economy, China semicon industries, they are also producing a lot oversupply already. And then the US is having a tariff on our chips company. So all these negative news you avoid, you ignore. Okay, so that means you are into this confirmation bias. Over concentration, you cannot concentrate on one sector. Okay, you have to diversify across different sectors. And the most important is that you don't focus too much on the short term, but you look for the long-term value, okay, for long term. Okay, so next we are going to go into the ETS. Okay, so how many of you have not try out this ETS? So this ETS is actually from My Bursa. Okay, so you can go to the My Bursa. Okay, you can go to the Bursa Malaysia My Bursa homepage. I give you this link. Okay, so we can register. Okay, so anybody not registered yet? And can I see anybody not registered yet? So if you haven't registered, you may register, okay? Because it's only you register, then only you can go for this virtual trading. So this is a virtual trading account platform. Okay, so you go to the market, you go to the tools, and then you go to the equity simulators. Okay, so this is a simulator. There is also a derivatives. So we focus on the equity simulator. So then you go to this equity simulators, then you can see that this is today's real time, okay, today's market. So today's market, you can screen through here, all stocks, right? So normally I want to look at the, you can look at the FBM KLCI, okay? If you look at the FBM KLCI, which means that these are the top 30 component stocks of our KLCI. So the reason why I want to look at it is because I want to monitor the index. Okay, so many people, you can have your own watch list. So if let's say you are not into the index thing, because the index is for people who are trading the futures index. So if you are not into that futures, you can go into the individual sectors. Okay, so you can, but this will tell you what is the sentiments. Okay, so sentiments, I see more green than red. Okay, about maybe half lah. Okay, half red, half green. Okay, so it's about 50-50. Then you can also sort by volume. Okay, so then this will be the most traded volume stocks here. So looks like public bank is part of it. Okay. Okay, we have to go through all stocks first. All stocks, then only you sort by volume. Okay. Then it will be based on the volume there. And you can also sort by the name also. Okay, sort by the trade and things like that. The gainers and the movers. So sort by the gainers. So which sectors or which stocks are the big gainers? So these are the big gainers. Okay, and then you have the big losers. So you can also create your watch list. Okay, so you say create watch list. Okay, so if you create watch list, you can create one. So I just created one dividend stock watch list. So I just added 2 of it here. So I can add more if I want. Okay, so perhaps I can go here and then I look for more dividend stocks and then I just add into this watch list. Okay, real time, yes, real time. So if you haven't, so please register and then try out, because each one of you will get 100K of a virtual money. So let's say you want to buy, let's say you want to buy, which one you want to buy? I go to the main one. What stock you want to buy? I demo here. Maybe the Maybank. Okay, so I look for Maybank. Here I got in my watch list. Okay, so otherwise you can look for Maybank here and then you can buy. So here I can see that Maybank is last price is 980 and the bid and the ask. So the bid is 9.8, the ask is 9.81. Okay, so I right mouse click and then I click buy. So then this pop up is the window, it will pop up and you will be given 100K. Okay, so here I want to buy with a limit order of 9 point. If you want to buy directly straight away immediately, then you have to buy the seller price, the ask price, which is the higher one. You buy the higher one, you can immediately get it. So if let's say you don't want to buy the higher one, you want to queue behind the 890, then you just key in this 9.980. Okay, so then you have to put in a queue, and you put in a queue, then you'll be looking at you are number 38. So here you have number 37, right? So then you'll be number 38 queuing behind 9.8. Okay, so now I want to, for fast, I want to buy direct. Okay, so I just buy. Order. Okay, what is the order? Minimum is 100 units, so I buy one. Oops, Maybank. Okay, so I will buy 10. Okay, 1,000 shares. Okay, then the price is 9.8. Okay, 9.81. Okay, so then I click buy. So then it will be order detail, then you say buy. Okay. Okay, click. So then you quickly go to the order status here, order status. You click your order status and check your order status. Okay, so then you see that you have a buy limit queue at 9.81, and then because this is a virtual one, so it may take some time for you to match. But if yours is a real account, if you are buying the seller price, most likely you will get it done. Okay, oh, filled already. Okay, so it's filled already. Okay, so that means that you got it. So once you get it here, then you can go to your portfolio, equity portfolio, and then you can see that your Maybank is there already. So you now own 1,000 shares of a Maybank in your portfolio. And then your share, your money will reduce also. Okay. Busa have app with the virtual trading. Virtual trading, I don't think so. I think it's a web-based. Okay, I think it's a web-based. Yeah, it's a web-based. Okay. Okay. So this is fun because it is a good time for you to practice on your, if you are new. Okay, so if you are new, it is always a good platform to practice on your skills. Okay, so I would think that this year is a low cycle. So moving forward, we should be looking at better and better. The economy should pick up because provided if Donald Trump do not do drastic decision. Okay, so what do I mean by do not do drastic decision? The drastic decision is, for example, okay, just say for example, the drastic decision maybe will be like the US may send like will get involved in the Russia and Ukraine war. Okay, so that is something that I do not want, because I know that Donald Trump, he wants to get the Nobel Prize. Okay, he wants to get the Nobel Prize. So it is his effort to try to stop the war. So if let's say he get involved in the war, that means that he will sure not get the Nobel Prize. Okay, so I hope that he will not get into the war. And then of course, I hope that he will not increase our tariff, okay, Malaysia tariff. So I hope that he doesn't increase. Okay, so that will be yeah, time is up also. Okay, so that will be for today. So today what we have learned is that I have introduced to you the concept of sectors and industry. And we look at the macro view. So we look at the whole sectors as a whole, and then from the sectors we identify the industry. Okay, the industry, then only you look at the leaders of the industry. Okay, select the leaders based on their fundamentals and also based on the outlook, industry outlook. Okay, green what is on the pro auto plan? What is that? I don't know. Okay, so is that an advertisement? Okay. Okay, so I hope that you guys have a better understanding. If you have any questions, feel free to ask me. Okay, so feel free to ask me questions now. So if you have any questions. Q&A. Okay, let me check the Q&A. Okay. So Q&A, no questions. And then here, how about here? Any questions? Can you show the industry rotation slide again? Sure. Okay. So let me show my industry slide. Okay, these slides. You want to talk about ETFs? Okay. Yes, if let's say you are interested in the Malaysia ETFs, then you can refer to the just now. Okay, so you want to take a photo, you take a screenshot. Okay, have you taken the screenshot? I want to move to another platform. Okay, so I go to the another platform. Okay, just now I mentioned that the okay. Okay, where is it? Um, okay, where is it now? Okay. Anyway, okay, if let's say you are looking for each of these sectors, right? And you have identified, you can also, if let's say you do not want to buy individual stocks, you want to buy the ETFs, you can. Okay, so for example, if let's say you want to buy the KLSE ETF, or if let's say you are looking for the Bursa Malaysia, we have some ETFs available. So let me show you the platform for our Bursa Malaysia ETF. Okay. So here we do see that there is the ETF here. So I will show you the ETF. Okay. So these are our Bursa ETF, right? So you can see that what are the ETF available. ETF usually is more like a team, okay, like a team. It can be a sectors, it can be a team. So in this case, we have China team, okay, and then we have the gold team. If let's say you wanted to explore into the gold team, you can also buy some gold ETF, and then you can also KLSCR FKL. If let's say you are interested in buying one big index like our KLCI, then you can also buy the KLCI ETF. Okay, so these three ETF is more uh, general, meaning that you want to involve in a certain sectors, or if you want to involve in a certain team, then you have to buy the team of the ETF. Okay, and the good thing about ETF is that it is like a fund, but this fund like a diversified fund. Okay, so for example, the TLSE ETF will be a diversified ETF with 30 component stocks in it. So it will be trying to mirror the KLCI index. So meaning that out of the 30 components, right? So you have each of the individual stocks, and each of the individual stocks, they have their own weightings. So for example, the Maybank is the largest weightings among the KLCI. So then this ETF, right, it will mirror this composition as well. So therefore, if you are buying into the KLCI ETF, you are looking at the portfolio composition allocation is exactly same as our KLCI. Okay, so if the KLCI increase, then this ETF will also increase. If it decrease, then it will decrease. So it will mirror the performance. Okay, so that is called the ETF. And then if let's say you are interested in the gold because you think that the gold is currently going for a bull run, so you want to diversify into this category, you can also buy into the gold ETF. Okay, so this one. Okay, and then if you are thinking that China may be doing well in the next 10 years time, okay, you want to invest now in China, then this is also the China ETF. Okay. Mm. Then Steve says that historical September is a bearish month. What is the possibility this year as there will be rate cut also in September? Okay, so yeah, so if let's say historically September is a bearish month, but however there is a rate cut, so maybe it may not be so bearish. Okay, so there will be if there's a rate cut, that means the stock market will be going higher. So if that is the case, then maybe this September may not be so bearish. Okay, so we will see, observe and see whether there is really a rate cut or not, because we saw that Donald Trump is very authoritative. So he already fired one of the Fed governor, what is her name? Lisa Cook, right? Lisa Cook. He already fired her. So which means that if he want to fire Jerome Powell, he may do so if he didn't want to have a rate cut. So because of this pressure, I think that Jerome Powell will have a rate cut because of this pressure. Okay, so yeah. And can you share soft copy of this presentation that well, no, because all these are my private copyright. Okay, so I will not share. Okay, all right. Okay, so any other questions? Um, okay, okay. So if no questions, then I will pass back to our moderator, Atira. Okay, thank you, Atira.
Hi. Okay, we can. Okay. So we will because you did have do a Q&A session just that. So we will proceed to our next slide. I would like to thanks I would like to thank you, sincerely thank you for to Miss Pauline for taking time to answer all the question and all the slide that people have asked, and thank you for sharing